Welcome to VIB second quarter 2021 performance announcement. My name is Antu, in charge of VIB Investor Relations, and will be MC for today's webinar. With us today we have Mr. Hoàng Linh, CFO of VIB, who will go through some highlights of VIB financial results in first half 2021. After that, Ms. Trần Thu Hương, Head of Retail Banking, will share some remarks of VIB key strategies and business performance. Finally, Deputy CEO cum CIO, Mr. Trần Nhật Minh, will give final speech for the presentation session by delivering key messages about VIB digital banking, which is our core business. The main presentation today will be followed by 5-minute break, after which we will return with the Q&A section and close our webinar today at 5:30 p.m. If you have any questions, please scan the QR code on the screen or type in QA box. We will try to answer your questions as time permits. The rest questions, our team will follow up with you by email. Please note that presentation today will be recorded and a replay will be made available on VIB website. I now will turn it over to Mr. Hoàng Linh, CFO of the bank, who will start presentation today with financial performance in first half 2021. Mr. Hoàng Linh, over to you.
Thank you, Ms. Thu, and good afternoon, everyone. Thank you for joining us today for our performance briefing. So to begin with, we believe that most of shareholders, investors, and partners join us in the webinar today have known about VIB very well. And for those who are new to us, and we would like to give a brief introduction about the VIB. So starting from the 2017, we aggressively shift our focus to the retail banking through our core retail product. And the aim of our 10-year transformation is to become the leading retail banking in Vietnam in terms of scale and quality. And to achieve our goal, we have three solid foundations. Firstly, we have embedded a best-in-class operating model that including the unique flat blockchain organizations. And we are pioneer in international best practice, particularly in Basel II, Basel III, and IFRS. And we are the first bank applying the AI, machine learning, and big data in credit card business. And we have the best risk management and governance model. Secondly, we grow our customer base and market shares, and we are the #1 in the retail lending book growth by 49% per year in continuous 5 years. And VIB has the highest portion of retail lending in the market now. And we are the #1 in the auto loan market share. We also are the top of life bancassurance market share. And we are leading the credit card technology and innovation. We got the award of Vietnam Digital Bank of the Year that granted by the Access AAA company. And thirdly, we consistently deliver a solid and profitable performance. Our PBT grows by 70% per year in 5 years, in the last 5 years of transformation. And our ROE, the return on equity, reached more than 30%, and so far it is 33% already. And we are in the top 5 of private bank of market cap in Vietnam. And finally, we have growth business with the international financial credit institution that including IFC, ADB, and other overseas foreign banks. And our credit line with IFC and ADB now is about $1 billion US dollar already. So that's the three solid foundations that VIB has in the transformation journey. This slide shows you the performance of VIB in the last 5 years of transformation. So you can see that our PBT as well as the return on equity go up year on year, quarter on quarter. So the transformation journey of last 5 years bring us to the top 3 efficient bank in the market. for the 10 continuous quarters. Looking forward, we continue our goal to become the leading retail banking in both scale and quality, with key focus of our strategic business. The results momentum of last 5 years are the strong base for us to continue our transformation. Currently, all of us are facing the challenge of the COVID-19. So it is too early to say too much about the forecast, but we look forward to the best and hope that all of us will overcome the pandemic. So during the difficult time, it is the opportunity for us, for VIB and other banks as well, to build up the strong business foundation, especially in the digital availability. So at VIB, we hope that there will be very light impact on our business, because we are ready and ready for the challenge, and we prepare things in advance. So now I would like to take you through to VIB key financial performance of the first half 2021. And let's begin with the key numbers that I highlight here. The first remarkable number is the retail lending growth. Although during the COVID time, VIB total credit growth was still up to 8.1% year to date and 32.3% year on year. And because we focus on retail lending, so the retail lending growth by 14.2% year to date and 40% year on year. So as a result, the retail lending has accounted for 89% of the VIB total lending portfolio. It's very high, and it is the highest portion of retail banking lending in the market. And the next highlight is the PPT and ROE. The PPT was nearly 4 trillion for the first half of the year, and our ROE continued to lead the market at 33% for last 12 months. And also the return on asset, ROA, also strongly increased to 2.5% for last 12 months, which increased by 0.3% compared to the 2.2% of the full year 2020. And the PPT growth rate was 68% year on year. In terms of the TOI, the TOI achieves 7.3 trillion with a growth rate of 52% year on year, which came from both NII and non-NII components. For the NPL side, the NPL was well managed at 1.3% in the difficult time of COVID. The NPL is considered to stable thanks to the lending strategy towards the retail segment with the high collateral secure lending. And the last one, we have the strong capital with CAR ratio is above 10%. And this is a level sufficient buffer for the business growth, and we balancing with the efficiency ratio of return on equity. So this slide, I will go through the detail of the P&L with you. The profit growth of 68% as a result of the performance of TOI, OPEX, and provisions. TOI growth by 52% came from both NII growth 55% year on year, and the non-NII growth by 41% year on year. And the NII income growth came from the intensive lending growth from the beginning of the year to optimize the risk balance. And we also improved our cost of funds as well. For the non-NII income growth, the key two products are the banca fees has a growth of 12% year on year, and card fee growth of 46% year on year. And other transaction fee growth by 66%, and other income of write-off recovery growth by 116% year on year. It's very good result for us. And the ratio of net fee income per TOI was 20%, and this ratio is amongst highest bank in the market now. And why the TOI growth 52%? The OPEX growth was only 33%, leading to the jaw ratio is about 19%, and the cost to income ratio continued to reduce to 37%. And the provision expense grow by 54%, that align with the TOI growth and stable NPL ratio, as I mentioned. So we will have the detailed analysis for the provision in the following slides. So as a result, VIB PBT achieved nearly 4 trillion, 68% year-on-year growth, and produced ROE of 33%, and the ROA is 2.5%. That is very good results. Could you go to the next slide, please? Now I would like to move on to the lending and deposit retail. So our total credit balance was 185 trillion, grow by 8.1% year to date and 32% year on year, in which the retail lending grow by 14% year to date and 40% year on year. As we continue to focus on retail lending strategy, the credit mix continue to be the retail weighted, with 89% of the total portfolio. And this credit mix with high proportion of retail lending have helped us to maintain the blended lending interest rate we call blended LIA. And you can see that the blended LIA was stable at 10.6% for total portfolio, in the context that we have reduced the LIA for particular segmentation who was impacted by the COVID-19. In the deposit side, the deposit balance was 168 trillion, grow by 12% year to date and 31% year on year. And the deposit mix comes from the retail portion, accounted for 73% of the total deposit. The CASA ratio is 13%, and the deposit interest rate there has reduced to 4.3% in the quarter 2 of 2021. We have improved by 60 bip points year on year. So that's the slide of the lending LIA and deposit and DIA. And now we move on to the slide of the NIM of the total earning asset portfolio of VIB. So while the total assets of VIB is 277 trillion, the interest earning assets was 266 trillion, grow by 11% year to date and 35% year on year, and accounted for 96% of the total assets. Then the interest earning asset mainly includes the lending to customer, which accounted for 71% of the total. And the other are the lending to the credit institution, the bank bond, and liquidity assets like government bond, interbank, and other, excluding the cash on hand. For that portfolio mix, the interest earning assets has the blended yield of 8.1% in quarter 2 2021. And reduced year on year, but stable quarter on quarter in the first half of 2021. And for the interest-bearing funding mix, the main portion of funding mix is the customer deposits, accounted for 67%. And the other as bond and CDs that issued by VIB, which accounted for 11.6% of the total funding. And the cost of fund of VIB bond has been moving down trend now. And almost bond issued by VIB are medium long-term tenor. The other important funding is the offshore funding. We have the offshore funding balance of 17.3 trillion. That accounted for 7% of the total funding. And the offshore funding has both medium long-term and short-term tenor. So for your further information, VIB has in the offshore funding, we have 2 syndicated loans with a total amount of $255 million in medium long term. And besides that, VIB also has the stable, the short-term offshore funding in kind of the trade loan facility with total amount up to $500 million. And the cost of fund of offshore funding currently is very low, and based on the LIBOR plus margin for the US dollar currency. And those loans are provided and led by the global financial institution and overseas bank, including IFC, ADB, Cathay United Bank. And the remaining part of the funding is interbank funding. The net interbank liability accounted for 12% of the total funding, and which are mainly virtual and the deposit with tenor below 3 months. So for that funding mix, VIB currently has the cost of fund average is 3.8%, and this cost of fund is in the moving down trend. And together with stable asset yield of 8.1%, VIB has current NIM of total earning asset is 4.6% in quarter 2, stable movement from the quarter 4 2020 to now. Next slide, please. Now we go to the detail of the credit mix in terms of the key segmentation, key product, tenor, and liquidity ratio. So the figure on the left-hand side shows you that the credit mix by segment and product with our two largest lending product is mortgage and auto loans. So mortgage loan reached to 79 trillion balance and grows by 16.6% year to date and 46% year on year. And the auto loan reached to 49 trillion balance, grow by 6.6% year to date and 26% year on year. And we keep the corporate lending flat for the reason to focus on the lending, retail lending. And these figures show you that the market still have the demand for the credit grow in the retail banking. And our capability to for lending growth was always adapt the market's demand as long as the credit quota is given by the SBB. And the right-hand side, the figure shows us the market, the credit mix by tenor. So with our lending strategy focus on retail banking and the two key products are mortgage and auto, our credit in medium long-term status was kept at a very stable level. It's 70% all the time. You can see the trend. So with the credit mix and funding mix, our two liquidity ratio, LDR, and short-term funding for medium long-term lending was well managed at 73% and 33% respectively. This ratio has sufficient buffer to the SBB limit of 85% for LDR and 40% for short-term funding for medium long-term lending, and support us for the future growth of asset. Next slide, please. Now the next slide will show you quickly about the fee income components. As I presented in the P&L slide, the total fee income per TOI ratio of VIB is 20%, and this is one of the highest ratio in the market. And the fee income came from two major products, that's the banca and credit card. Banca fee grew by 12% year on year, and credit card grew by 46% year on year, and this is very good results in the difficult time of COVID. And the banca fee accounted for 38%, and the card fee accounted for 20% of the total fee income. And we see the big potential in these two key products of VIB. And my colleague, Mr. Hương, Head of Strategy and Retail Banking, later on we share with you the further detail of our fantastic performance of and how the potential growth of these two products in VIB in this section of the retail banking business presentation. Next slide, please. Now we move on to the OPEX side. So VIB is a retail banking, and we have an excellent operating model. The retail banking model gives you the higher asset yield, but also the higher cost to income ratio than those of corporate banking model. In our operating model, when we shift the strategy to the retail banking starting 5 years ago, and our staffing mix has changed significantly to the structure of 20% of back office staff and 80% of front and middle office staff. This strategic structure, together with our compensation policy of contribution linked pay, have helped us very flexible in the adjusting the cost to be aligned with the business growth. In the first half of 2021, OPEX grew only 32% year-on-year, while the TOI grew by 52% year-on-year. So the result is the cost-income ratio reduced to 37%, and the OPEX can be adjusted to grow higher or lower, subject to the business growth. And the OPEX optimization has been also supported by the digitalization and systemization of sale and operation process. We support by the data-driven business decision-making approach. And we also committed to invest $10 million to the CapEx, to system, database, and technologies in 2020 to the next coming years that can help us to grow strongly in the future. Now we are talking about the asset quality. And in terms of the asset quality, we have the stable moving down trend of the NPL ratio. The NPL ratio per circular 02 has been moving down to 1.32% as of Q2 2021 from the 1.46% as of end of last year. So while the lending growth is 8.1% year to date, the NPL balance increased only 4.5% year to date. And especially if we compare to 12 months, the NPL balance has reduced by negative 5.4% year on year. And this is opposite to the lending growth of 32% year on year. And the provision was made up 54%, was up to 54% year on year, which is aligned with the TOI growth. And our credit cost accounted for 0.7% of the total lending balance. For about the loan loss coverage ratio of VIB, the LLCR rate of VIB now is 64%. And I can say the loan loss coverage ratio is based on how much the provision you made to cover your bad debt. And the provision made will be subject to the risk exposure amount after collateral value. As I said to you in the previous slides, VIB has a retail lending that accounted for 89% of the total lending. And in terms of the secure lending portion, VIB has the 92% of the loan portfolio as secure lending with a high collateral value. And our collateral ties is mainly the real estate, mainly. And moreover, the more important that our loan to value ratio of the loan portfolio is only 40%, 40%, very low level. So you can find this information in our audited report that published on our website. So for the provision, we make the provision following the SBV regulation. The provision cannot be made more or less, but we have to comply with the regulation. We cannot do more or less. We have to comply 100% with the regulations. So the LLCR of VIB reflects the lending strategy, asset quality, and collateral management strategy of VIB. For the COVID restructure loan, this slide can show you the restructure loan gradually decreased over time, thanks to the good repayment of the customer. And the proportion of restructure loan decreased significantly to 1.3% of the total credit. And the most of the restructure loan are secured by the collateral. And for the provision made extra, according to the circular 03, the total extra provision to be made for the current COVID restructure loan is 52 billion. And as per the circular 03, we can choose option to optimize this extra provision in the period from 1 to 2 years time from 2021. And the last slide, this is the capital position and the CAR ratio of VIB. And you can see that VIB has completed the 3 pillars of Basel II. So the CAR information and the capital information, you can find it easily in our website. We provide it in our website, vib.com.vn. And our current CAR ratio is about 10%. And with our retail lending strategy, our risk credit risk weight assets ratio is coming down to 79% only. That's information as a capital and CAR ratio. And last slide, I can share to you the VIB governance when we are following the and applying the international risk and financial standards. For the Basel II, you know, VIB has launched Basel II internally in VIB from 2015. Before SBV launched the regulation on the Basel II. So when the SBV launching the Basel II regulations, VIB already ready for that application. And VIB is the first bank, Vietnamese bank, to launch the 3 pillars of Basel II. And also we are piloting the liquidity management, one component of the Basel III already. And in terms of IFRS, we are in the completion phase of the IFRS audit. And when finished, we will be one of the 2 banks of Vietnam has the IFRS audited report. So I have finished my presentation of financial performance update of VIB in first half of 2021. And now I'm pleased to hand over to my colleague, Ms. Hương, our head of strategy and retail banking, to share to you the very interesting part of the retail banking business. Ms. Hương, please.
Thank you, Anh Linh. Hi, everyone. I hope that you are all safe and sound. And I know that most of you are curious on how VIB can become from a no name of retail banking. And now we are top name in retail banking in the market just in 5 years. And that let me walk you through our strategy, figures and facts about the top businesses of the market that we are doing right now. We have been applying a very bold, clear, consistent, and sustainable business models that's supported by our excellent operating model. So you can see in these slides here, we have 4 pillars that we apply for every single business of retail banking. We started with our customers. So with clear customer identification, clear understanding of our customers' needs and features, we are able to create a comprehensive CVPs for each customer segmentation. We translate our understanding about customer into the products, and that enables us to tailor-made every single product features and offers to different segmentation, make it competitive, simple, and best fit to our customer needs. And right now you can see we have focused mainly on mortgage loan, auto loan, credit card, business loan, and bancassurance. Moving to next pillars, as you can see the third one, VIB has been still the previous slide, yeah. VIB has been invested intensively, both physically and digitally in the sales platform. We now have more than 5,000 professionals, over 163 branches nationwide. And I'm sure that you may be our customers and you may really appreciate our modern look and customer-friendly experience that you have had through our branches. Besides, we invest a lot on digital platform that enable us to reach out to more clients and easily connect to our partners. The final one in the business models is very crucial. It is marketing. So for the last 5 years, we have been doing great in building a strong brand awareness in our market. And together with that, we perform really outstanding social media marketing that make us become the case study for Asia region in Facebook and Google. So the whole business models are supported by our operating model. And you can see here the operating model helps us to quickly transform to better self and therefore quickly adapt to the changes in the market. What we have here is really unique, and I don't think that we have a similar patterns in the rest of the market. The processes and operations enable us to offer the really fastest turnaround time, and we can reduce the paperwork and the manual work in our branch network. And we are welcome to apply new technologies, new innovations, and a very intensive analytics so that we can better service our clients. VIB is very well known for a very prudent risk appetite, and we embedded a very strong risk management across the system. One more thing about VIB that I think that it is unique is that we apply a flat organization. So by saying flat, I mean that I think that we don't have more than 2 layers for decision making, and that makes us really quickly respond real time and on time to every changes in the market. So it is just a very overview of the business models and operating models, and I'm confident that those models helps us in the last 5 years, and it's sure to help us stand out in the next years forward. So if we have a closer look on our customer segmentation, the triangle on the left-hand side shows you the mass affluent, and high net worth. From the right-hand side, you see that the chart shows how our focus extends to different segmentation of the customer segmentation: auto loan, mortgage loan, credit card, business loan, insurance, wealth management, mainly focused from affluent and up. From mass affluent and up. This focus really helps us to build a strong customer portfolio, and that helps us to maintain a great performance from the ups and downs of the economy. So with such a solid business model and operating model, we grow intensively and aggressively in the last 5 years. And you see that literally from 2016, we start with only 21% of the bank profit. And after 5 years, we grow to 70% of the bank profit. And this is the beautiful numbers of what we have been doing so far. You see, we started with 27K for the credit balance, and just in 5 years, we grow 6 times bigger than where we started. And right now, we are nearly 165K for credit balance of retail banking. Well, compared to other banks, what do we look like? Compared to other banks, and here you see the chart, I'm not including the state-owned banks here, right? So VIB is in the top 4 at the end of 2020, but I believe that the position was much better for this year. But you can see that the outstanding 49% of the CAGR that we have made, in the past 5 years, this is the record of a private bank can do in CAGR for the last 5 years, and it is really outstanding compared to the rest of the market. Okay, so here is exactly what we're doing with retail banking book. You have heard a lot about auto loan, right? But the main focus of retail banking book right now is mortgage loan. So you see that over the years, mortgage loan accounts for from 42%, and now it is nearly 50%. And auto loan, in other hands, it is about 23% in 2016, and 5 years later, it is 30%. So these two together make it nearly 80% of the whole retail banking book. And you can see that this focus is maintained steadily and very sustainably over the 5 years period. And such focus makes us become the professional in what we are doing. And once you are a professional, you can become a leader of what you are doing. And that's what happens with VIB in the last 5 years. Now, maybe this is the first time you see what our mortgage book look like. our mortgage book is built totally different from the rest of the market. So you see here, from the very beginning of the retail banking book, the residential book is account for more than 50%. And now we are able to build it even to 70% of the mortgage portfolio. The other 30% is for construction and renovation. And you can see that we pay very little or no attention to under construction home mortgage loan. This is the very unique model that I think that help our mortgage book stay very healthy and strong, even the downtime of the economy. Two reasons. The first reason is the value of the collateral. For sure, the residential is the red book, and the value of the collateral is increasing faster than the other type of the mortgage. And the second reason is the liquidity of the red book is much better, it's much quicker and easier to sell than the other types of the mortgage loan as well. So this book looks really nice, strong, and sustainable to us for the last 5 years, and we believe that it's still a very good model to grow for the next years. Now, this is something really very familiar to you. You have heard a lot about VIB, become the leader of auto loan for 5 years in a row, right? So we maintain our market share around 25% up for the 5 years period. And recently, you can see that the market share is decreased a little bit to 23% on purpose, because we want to stricter our risk appetite on the difficult times. So overall, if you look on the right-hand side, for the last 5 years, in average, we have like 25% in average for the market share, and it is even bigger than the second one and the third one together. So I just been through some of the growth of the business, and you can see that we grow aggressively, but we manage our risk impressively. So in 2020, we recall that when the pandemic first hit us, we have 1.4% for the total retail banking book NPL, and we have 1.9% for the mortgage and 1.7% for the auto loan. And you see how smoothly the lines are over the years, even through the very difficult times of the economy and the society. So you see that we don't experience any shocks in increasing of the overdue and NPL over the time. Like I mentioned before, we have strong product and customer portfolio, we have strong customer segmentation, and we apply strict risk appetite at the very day zero of the loan. So we believe that we would not hit as seriously as the rest of the market. I just went through very key components of our lending portfolio, and you may ask, how big is the opportunity we can build our lending in Vietnam? And my answer is, it's huge opportunity. If you look at the chart and you see the retail loans over the GDP in 2020, Vietnam is around 25%, and you compare to other countries in the region, or Singapore, Hong Kong, United States, they have the ratio even more than 80% or 50%, 70%. So this is the huge opportunities for VIB to grow the lending market. And what we did in the last 5 years, becoming a top leader of retail banking, provides us, I think, the huge lessons, huge experiences, and huge advantages to take these big opportunities in the future. Moving next to other topic of VIB, and I'm sure that this is also interesting topic. When you mention about VIB, you mention about this. This is bancassurance. People ask me recently, when you heard about new contract coming, very nice contracts, big banks come into the bancassurance, middle bank comes in, and small bank comes in. What do I think about the competition? And I think that we love good competition. So only in good competition that a leader can become a greater leader, and only in good competition that we can grow smarter, faster and more efficiently. And that's exactly what we want to see ourselves in the next 5 years, 10 years, or 15 years. And if you see the chart here, you see that the cake is huge for everyone to join and make the best out of it. For the first chart, you see that in Vietnam, 90% is deposit compared to only 5% is insurance and pensions. And you compare to other countries in the same region or in USA, the portion is so much different. And you see that the insurance and pension is account for more than 40% or even 60% in some countries. And look down to the other chart, you see that the insurance premium as a percentage of GDP of Vietnam is really tiny. We have only 1%. And compared to other countries, it's about 6%, 10%, and even in Hong Kong, they have 20% of the insurance premium compared to the GDP. So I think with the fast developing country like Vietnam, and we have a big population, I believe that the cake is big for everyone to join and make a really good performance from it. So this is what we look like compared to other banks and our positions in the market. For 5 years in a row, since I remember since 2016, we are consistently in top 1, 2, and 3 of the market over the last 5 years. And this is the number of Q2 2021. We are the number 2 in the market, and actually SCB is very new to the market. They just won the contract. So you can see that they sell very aggressively and they have a big discount for the clients. So sometimes I will ask, how can VIB become the leader in the bancassurance market, given the fact that we are not the biggest banks in terms of number of branches or number of sales force? And to me, I think that it does not really matter of how much money you have in the wallet. It is really the matter of how you spend your money in your wallet. And that's exactly what VIB do differently from the rest of the market. We approach this opportunity quite differently from other banks, where other things that they are selling the partner products, we think that we are selling our product. And that's why we build a from A to Z process, and we take full control and full responsibility over the process. And that helps us quickly enhance our business and make it more productive in the market. Over the last 5 years, we are always the top in the market, and you can see right now that Prudential is the number 1 of bancassurance in the market in Q2 2021, and among 9 or 10 partners of Prudential, VIB accounts for more than 60%. Okay. Next topic is the topic that I'm very excited to share with you, because that helps VIB become very popular name recently. It is credit card. So we just started rebuilding our credit card portfolio 2 years ago in 2018. And at that time, looking at the market, we see it's quite premature. Very fundamental features, no innovation, no digitalization, no technology, a very low customer experience in the entire market. So we decided to do the business in a completely different way compared to the rest of the market. We make it far beyond the market normal practice, and we also make it far beyond the customer expectation. So you know our slogan, right? VIB leading the credit card trend in Vietnam. The trend here is the first time for product features and innovations that Vietnam never have before. And it is also the first time of new technology ever introduced in Vietnam, and the highest level of customer experience that we applied into the market. And we did it. And I think that we did it very well. So right now we're number 1 in the market, and the first bank and the only bank in the market that we are able to issue our credit cards 100% online. No branches, no papers, no salesman. You just with your phone, and after 15 minutes, you get your card and you can use it immediately. We're also the #1 bank for the activation rate of MasterCard issuers in Vietnam. And what amazingly is just after 2 years, our card spending grew nearly 200% and is double to the market average. So I go through quickly of our portfolio. Right now we have like 9 credit cards in our portfolio, but this is the 4 very outstanding, and this is the first one ever of its kind that we have in Vietnam. The best online card, the Online Plus VIB, that have 6% of the cashback, and we have free whole time fraud protection insurance. And we also have the first time ever Vietnam can have is the interest rate 0% of interest rate credit card. And as the auto leader in the market, we also issue a credit card for the auto owners and car owners, that we have so many cashbacks and rewards programs for every single spending of the car owners as well. And recently, you have heard a lot about our first dual card in Asia Pacific. It is the Online Plus 2-in-1 that we are able to combine both credit card and debit card at the same time. So by doing that, we can improve the customer experience and help the one without enough credit history to open a credit card. They can still enjoy the card with the debit side. So that's about the new innovation and very attractive and competitive product features that we have been introduced to the market so far. The second thing is the technology, that I believe that VIB is the first one and the only one in the market that right now we can apply AI, big data, machine learning in every single steps that the customer engage with us, from acquisition to usage and the after sales service. And we're also the first bank in Asia Pacific to apply MasterCard Digital First technology, which allow us to have numberless card. That is the highest level of security that you can have with your credit card. And we're also the first bank to apply new technologies, no paper pin, we have green pin, digital, and we're the only one bank in the market that have the virtual card in the market as well, with the eKYC, auto scoring, and e-signature. And this shows you how, the team has been done an amazing work to make the credit card brand really stand out in the market. So many organizations names us a leadership in innovation and most innovative bank in terms of credit card. And if you look on the right-hand side, you see that people mentioned about us much more than the other banks. And in 2020, we account for 24% of the total, mentioning about credit cards on social channels. And Facebook and Google naming us a very case study for them in Asia. This is the last slide on the credit card, and I just show you how we have been doing for the last 2 years. We have sharp increase in both card acquisition and the usage. By the end of Q2, we have 332,000 card in force, and we expect to have more than 500,000 card in force by the end of this year. Despite the very aggressive growth of the card in force, you can see that our line for spending per card per month is really sustainable. So it is around 18 million to 19 million per credit card per month. And that helps us to maintain our top 2 in the market in terms of spending per card in 2020, although we just did it 2 years ago. And you can see that this shows us that we have really good quality in terms of our customer portfolio. It means that we target the right person, right? They keep spending, and even in the very hard time of quarantine and pandemic, they still keep the speed of spending very good with the VIB credit cards. And it also shows us that the quality of our credit cards, that now we can become more popular and we become the top of their wallet. So it's pretty much about retail banking, and what we have been done so far is to build a leading in quality and scale retail banking and a sustainable business for a very long term. I'm sure that you still have some questions on retail banking, and we still have the question and answer section later on, and I'm happy to answer further questions from you. And I hope that my sharing will help you understand more about what we are doing right now with retail banking. Thank you. And moving forward, this is about the best digital banking experience, and I would like to introduce our CIO, Mr. Ming, to share with you on the topic. Over to you.
Thank you. Hello, everyone. Today I'm going to be talking to you about why VIB has been awarded as the best digital banking experience. While sitting here talking to you through Microsoft Teams, this is something very new to many of us, I think. Normally, we have been meeting face-to-face in the meeting room, but the pandemic have made our life change completely. This became the new normal to us and pushing digital transformation faster than ever. Moving to the next slide. At the slide in the picture, we can see typical Vietnamese family in pandemic. Father is working from home. Mother is shopping online at Shopee and making payment with Momo wallet or mobile banking app. A child is studying from home. Another child is just watching video on YouTube Kids. At night, they can gather and watch movie on Netflix all together. So today, consumers are already or becoming digital active, natively accessing the digital ecosystem through the different devices, mobile, tablets, or laptop. Moving to the next slide. So what have VIB prepared or done during this time? VIB has started our digital journey 5 years ago and has built a solid digital architecture. On the left, we have VIB customers. They accept to VIB digital touchpoints through their devices, mobile, tablets, PC. On the right, we have digital ecosystem with different players. International brands like Facebook, YouTube, Netflix. Regional players like TikTok, Grab, Shopee. And local players like Zalo, Momo. In the middle, we have VIB digital architecture, including three main components: systems, data, and technology. In system, we have two groups. The first is banking digitalization. We're transforming traditional business process into digitized process in order to have full banking operation digitalization. We have been doing some initiatives with different systems such as loan origination system, customer relationship management, core card system, core banking system. And the second group is digital banking. For digital banking, we have and continuing invested heavily in digital platforms. My VIB mobile banking app for retail banking customers, one of the most awarded mobile app in Vietnam. Smart Sale app for VIB fuel sale, and VIB website, one of the most well-structured and informative and sell platform in banking sector. The second component is data. Previous slide. Previous slide. Previous slide, please. Previous slide. Okay. The second component is data. Here in VIB, data plays critical role to our business. We have been working with a lot of international brand name in data to implement customer data platform with big data, AI machine learning technology. This platform can help VIB predict customer behavior, doing cross-sell, upsell, and manage risk. Moreover, in order to better manage our data assets, we're planning for data governance platform and tool. And the third component is technology. We put our focus into cloud computing, microservice architecture, robotics, and open API. The next slide will be more detailed on all the initiatives that we are doing and planning to do. So let's look at the digital initiative that we are doing, planning to do. For digital banking digitalization, we have been replacing some key system. Loan origination system, first go live will be in this October. The core card system, the second phase go live will be this September. And now we are selecting the new CRM system, and we are selecting core banking system. It should be cloud native system, very flexible for banking product configuration and open for third-party integration with highly scalable capability. Next slide. For digital banking, we have launched digital account with 100% digital onboarding process, including significant features for Millennium and Gen Z customers. We have also produced a lot of digital native products, such as VIB Online Plus, iCard Online Insurance, and Online Saving. These are completely digital native without the need of physical touch. Moving on the next slide. For data, VIB have implementing different data solution, data governance, customer data platform, big data, AI, machine learning. Data-driven decision-making is a business culture of VIB today. Thanks to data standardization and automation, VIB can have excellent operational model to support business growth. Data standardization, cloud solution can help VIB increase quality of digital services for customers, including cyber security. We also adopting robotics to improve our operational efficiency, integrate with legacy systems, replace human in repetitive tasks. We are moving from monolithic architecture to microservices architecture. MyVIB 2.0 and Smart Sale 2.0 are built on microservice architecture, cloud native technology, and plan to launch earlier. We have implemented API management platform to integrate with third party in digital ecosystems. Currently, VIB have been open to more than 150 service providers in digital ecosystem. Next slide. All the initiatives that we have been doing or working on have helped us achieving some initial result in terms of quantity. 130% growth on digital registration over the year. 91% digital transaction via digital platform, and double year-on-year growth on digital transaction. Next slide. So the quality of work we have done have been acknowledged by international experts. From 2016 until now, we have received numerous awards from these panels. We thank them very much for acknowledgement, and to us, this is just the beginning. Okay, that brings me to the end of my presentation. Thank you for listening and attention.
Thank you very much, Mr. Linh, Ms. Hương, and Mr. Minh for bringing many insightful information about VIB first half performance. Now we close the presentation session and have 5-minute break, after which we will return with Q&A session. If you have any questions, please scan the QR code on the screen or type in the Q&A box. Thank you very much. Welcome back, everyone. Thank you very much for giving us many interesting questions. We will have 30 minutes for Q&A session, and we will try to answer your question as time permit. The rest question, IR team will follow up with you by email. To start with, a question coming from Mirae Asset Fund Management, SSI, with Capital Securities. How has the prolonged 4 waves of COVID-19 been affecting VIB business? How does VIB assess the repayment ability of customer loans? And what would be the key business growth driver for VIB in second half and 2022? For this question, I would like to invite Ms. Trần Thu Hương, Head of Strategy cum Head of Retail Banking, to share some information. Ms. Hương, please.
Okay. Thank you for your questions, and I think that most of you are concerned about the impact of the COVID-19 to the bank's performance. And I'm sure that the pandemic hit every single one of us, every single industry, including banking business as well. But the good thing in 2021 is we are no longer new to the pandemic, right? In fact, I think that we have experience, we have lessons for the last 18 months. Thus, we can be able to build different scenarios and different plans for whatever happens in the future. And we did that with VIB. We build different scenarios to grow and protect our businesses. With such plan, we ensure that VIB will be the least to have adverse impact from the pandemic. And you see the graph here, it is a long line for the last 10 quarters. And during that quarters, we all experienced the ups and downs of the economy, but we still maintain a very good performance over the years. And we still be the bank with the highest return on equity. And for the questions of how we assess the repayment ability of customer loans, I think that not until now we assess the repayment ability of our customers. We did it at the very first time we meet our clients with all the assessment on the loan repayment ability of our customers, the income, the assets, and all the assessment on the collateral as well. So we're confident with our customer repayment ability. And like I said, we did it at the very first time we meet them, not until now. And the key business growth driver for us in the Q2 2021 and 22, and I believe that it is the excellent business model that I shared with you before that enables us to transform to a better self and quickly react to the changes in the economy. And also all the digital solutions that we are applying right now for every single product of retail banking also helps us to smoothly connect to more customers and easily connect to our partners. So yes, it's going to be excellent operating model and our outstanding digital solutions.
Thank you very much, Ms. Hướng. One question about SBV credit quota coming from HSC, SSI, and IVS. Could you please share SBV quota for credit growth? Is it lower than bank's expectation plan? Any impact of COVID situation on the bank profit before tax and provision? This question will be going to Mr. Hoàng Linh. Could you please address some key information?
Thank you for the questions. I think the question is very interesting. And you just hear Ms. Hương talking about the impact of the COVID in the to the business of VIB. It is a quality question in terms of the credit growth. And now we have received the question on the credit quota. It is a quantitative question on the credit side. So yeah. Because banking is a credit, the credit is a core business of the banking, and when we have the low credit growth, it will partially impact to the performance of the bank. But I think it's not always. When we talk about the profit of the bank, we have need to mention and look at the details of each component of the PBT. So my answer is still yes, it is partially impact to the PBT, but we have many ways to improve the PBT to cover the shortage of the NII coming from the volume of the credit growth. But firstly, we're talking about the credit quarter first. During the difficult times of COVID, I believe that both SBB and commercial banks are very prudent in credit growth and risk control. So that's why a moderate level of credit quota were given to commercial bank at this time. So for VIB, we are the retail banking, and profit can be managed to grow from many components like credit growth, NIM management, non-credit product fee income, and cost management and asset quality. So I can share. I have shared to you in my presentation previously. VIB credit growth in the first half of 2021 is 8.1% and account for more than 90% of the credit quota received by the SBB. So this number can tell you that our strategy, as well as the capability to grow the credit right at the beginning of the year, so that we can improve the average balance of the whole year in the context that credit quota is limited. For the second quarter, that VIB just was allocated by the SBB, we received another 5.6%, and this level is one of the highest quota levels that SBB allocated to amongst commercial bank in the quarter 3, and we are very appreciated. So that's the quota of the credit quota growth. The other side of the NII components is NIM. And as I presented, I believe that our business team are doing very well to turn the CASA ratio to be significantly increasing in the time coming to increase our NIM. And for the fee income, we are doing excellent in the banca fee and credit card fee, and which are 12% and 40% growth year-on-year respectively, even in the COVID time. So banca fee and we still leading in the market in terms of the banca sale productivity per branch, and I believe that our banca sale will increase strong again when the COVID lockdown is open, and our customer can do their health check to complete the huge number of banca submission form that is pending in VIB now. And for card fee, as Ms. Hương shared to you, we are still ahead. We are still heading to the target that this product will become our strategic business and bring us towards 1,000 billion of fee income per year in the soonest time. In terms of the cost management, as I said, our cost-to-income ratio continue to reduce further based on the digitalization of all the sales and operation process. And we have an excellent operating model of retail banking with only 20% of staff are back office, and the other 80% of staff are front and middle office. So that staffing structure together with the contribution link pay model will help us very much flexible to manage costs that can be aligned with the business growth at any time. And lastly, for the asset quality control and provision expense in VIB, thanks to the strategy of lending book structure, with 92% of the lending book is secure loans, and the LTV is only 40%. So the NPL and provision are made very stable. And also thanks to that strategy, the NPL and collection and recovery rate of secure loan are always much higher than the unsecured corporate loan, which lead to other income of recovery will be better in next time. So in summary, I think that VIB has the excellent operating model, so we can easily and flexibly to shift our resource to the non-credit area to grow as a business, to cover and grow our profit as we wish. So I think that we will have the profit growth as our expectation in this year. And finally, I can share to you the information in the history that in the last 5 years, even though our credit growth for 5 years is 25% per year, but we still have the year of 2018, that the credit quota was given to us only 18%. But at that years, we still managed our PBT to grow by 95%. That can tell you our story of the excellent operating model of VIB. Thank you.
Thank you very much, Mr. Lin, for very insightful information. Another interesting question coming from Maybank Kim In. What is your digital banking strategy? The bank developed the strategy on its own or hire external advisor? I would like to invite Mr. Minh to answer this question. Mr. Minh, please.
Okay, thank you for your question. So VIB digital strategy in the period of 2020-2023 focuses on 3 components: system, data, and technology. So we have system for banking digitalization, transform traditional business process for the readiness of automation and moving toward to applying advanced digital technology for fully banking operation digitalization. And we have system for digital banking. We develop top-notch digital banking platform across the bank. And the second component is data. We develop data operation models as a foundational capability for future VIB data-driven business armed by advanced data technology. And the last component is technology. We implement cloud adoption. It means migrate and modernize application on Amazon Web Service Cloud and Microsoft Azure Cloud. We implement microservices applications, open API solution for integration with third-party companies in digital ecosystem. So the bank is developing the strategy on our own, and we partner up with top tech company in the world, particularly in the US and UK market, for digital initiative implementation. For example, Amazon Web Service, AWS for data and cloud, Microsoft Azure for cloud adoption, Willow Tree for app development, IBM and Oracle for multiple software services, Dell and Cisco for hardware services. We also partner up with startup and fintech for few particular product functionalities. Thank you.
Thank you very much, Mr. Min. That's pretty clear about our strategy. And we received one question from Dragon Capital, SSI, with Capital Securities, the combined funds and IBS about restructure loan. How much restructure loan portfolio of VIB coming from which segment? And do you have plan to increase new restructure loan balance? How much should the bank make provision and how much the bank already made provision for? So I believe that Mr. Lin already covered this information very clear in his presentation. Due to the time limitation, so I will move on the next question. If you need further information on this topic, I will follow up with you. Please contact us. Another question for business about auto business and the COVID pandemic coming from many investors and funds. How did the COVID-19 impact to the auto loan portfolio? And for automobile loan, liquidation value of collateral is usually below the market price, but it is still difficult to sell according to the local press. Will the bank take any action to improve this? Ms. Hương, can you please address VIB management and strategy solution for auto business?
Thank you for the question. So as I mentioned before, we have unique business model for auto loan, and that enable us to be both strongly grow in terms of the balance, and also we can manage well with the risk performance as well. So we are confident on the portfolio that we have been built for the last 5 years. As you can see here in this slide, we have strong risk management with prudent risk appetite. We start with the products, and for auto loan, more than 80% of our auto portfolio is consumer loan, not business loan. So you know that for the collateral as the consumer, used for consumer loan, the collateral value often can maintain the value better than the car used for the business loan. And every single loan in retail banking has the loan to value ratios lower than 80%. And even now, we lower that rate to 75% or 70% in some specific brands or specific customer segmentation. And like I mentioned before, we also apply very strict customer requirements at the very first time we meet our clients and advise them for VIB auto loan. The other thing is we have outstanding collateral appraisal models that we are applying, both internal appraisal models and external appraisal model. And we combine them together and make sure that we will choose the value that best benefit to the bank. And that also helps us to go through the downtime of the economy as well. For the collaterals, for auto loan, more than 90% of our port is new auto loan. So that's different from other banks. You can see that other bank port, they have a bigger portion of used auto loan. So for used car, of course, the collateral values cannot maintain a good portions over the years, but that not happen with the portfolio of VIB. And we have selected brands. The fact is that we are the leader in the market. Doesn't mean that we give our loan to every single car in the market. We focus on the top best brand in the market, and that top 7 brand right now takes up to more than 75% of our auto portfolio. So that's the other way that we can protect our collateral values, and that can help us to make the loan more profitable, and we can cover it easier than the other type of brands. And finally, you asked about the collections, right? And collection normally, the normal practice in the market is that we have physical collections, but in VIB, we have both physical and digital platform to collect the auto loan. And we are only bank in the market that have both physical and digital platform together. Besides that, we are also able to apply new technology and innovation that helps us easily. We can easily identify, the car running on the road and which one is our collateral. And that type of technologies is applied in VIB for years now, and that helps us a lot in terms of collecting the collateral. And the more interesting thing is, I believe that VIB is the only one only one bank in the market and the first one in the market that able to build a marketplace, a digital marketplace for collateral sales. Now, so you can easily come to vib.com.vn, right? And you can quickly access to our marketplace for collaterals. It is auto loan collaterals, mortgage loan collaterals, and other types of collaterals that we have. And moving further, you see that inside that, every single information about our collaterals is here, right? The customer is easily to come and see every single information, and we have really efficient and very convenient tools for them to search what type of cars you like, the models, and that helps them to easily search for the interested car. And similarly, we have with the mortgage loan as well. So everything is very transparent, full of information, easy to choose. And that marketplace have a very good traffic over the time, and especially during the pandemic time. And I think that this kind of technology, innovation helps us a lot in the collections work. And maybe it's really difficult for other banks to collect, auto loan or mortgage loan nowadays, but it's not the case of VIB. We did it well.
Thank you very much, Ms. Hương, for your sharing about auto business strategy. As you may know, today is our very first webinar open for shareholders, analysis, investor. So we received many interesting questions. We will extend our webinar for 15 minutes to answer your question effectively. Coming up to the next question about credit cards, I will go firstly the question from SSI for bank card business. Can you still sell bank card product during COVID time given the social distancing? What is the penetration rate for insurance amongst VIB clients? And what is the 13-month and 25-month persistency ratio of insurance contracts? And Ms. Hương, can you please say about the bank card business?
Yeah. Yes, we're still selling, and we are not only selling, but we still maintain our top position in the market for bancassurance sales in the last quarters. And social distancing do affect us, but like I said, we have prepared for that. And digital sales platform enables us to meet our clients in limited times, but we are still able to sell several products at the same time. So we have sticky advice strategy from this product to another product. Once a VIB salesman meet a client, even direct meeting or via Viber or Messenger or Facebook, we are able to sell bancassurance at the same time they are selling other products as well. So I think that we're still good. Of course, it's affected, but we're still doing good. The penetration rate of insurance amongst VIB clients. Wow, this is interesting questions, because although we are the top leaders of bancassurance over the last 5 years, but the penetration is still have many room to grow. Right now, our deposit customers have only 8% penetration for bancassurance, while our lending customers, less than 20% of our lending customers have bancassurance with VIB, and the lower number for credit card is only 5%. So we have huge opportunities to increase our bancassurance sales in the future. The 13-month and 20-month persistency rate of insurance contracts, right now it is more than 80%, and it is the top of the market performance in terms of bancassurance.
Thank you, Ms. Hương. I believe that information brings very clear picture for all of us about VIB bancassurance business. Coming up, we have one question about supporting package of VIB to customer who get impacted by COVID. There's question from Dragon Capital, SSI, SSC, IVS, FBTS, BVSC, and Phu Hương Fund Management. Could you please elaborate more the incentive lending rate provided to clients in the coming periods? And also, please share your point of view about deposit rate, lending rate in your bank in second half of the year comparing to the first half. How many basis points will be decreased compared to the first half? Also, what are the expected NIM? This question will be going to Mr. Hoàng Linh. Could you please share?
Thank you for the questions. I think this question is very interesting about the impact of the incentive lending rate for the customer who was impacted by the COVID, and how much impact to the NIM of VIB in the second half of the VIB. So in order to answer this question, I can share some information to you. So in VIB, the net interest income growth so far is 55% year on year, and we have more room to grow further in terms of the managing cost of fund. So even in the inside the year, it is impacted by the reducing the year for the customer who impacted by the COVID. We still have many area to improve our NIM based on the cost of fund and other things. So I can say to you, the NIM, as I said to you in the slide about the NIM of the interest earning assets, we have two components: the lending layer and the cost of fund. From the 2020, when the COVID happened, VIB have proactively reduced the layer to almost a customer that impact by the COVID from 0.5% to 2.0%. And in the last week, we also announced another incentive price to support for further to those customer segment in responding to the call of the government and SBB and also the banking association. So as a result, the NII and NIM of the particular portfolio will be impacted, but partially. The incentive price that we give to customer in last week is the average 1.5% for the portfolio of customer who was impacted by the COVID. However, the blended lending layer of the whole portfolio will not subject to the change of the layer of each segment, product, tenor, currency. The blended layer also subject to the structure mix, the credit mix of those components. So as I said to you, that's our lending portfolio. We have the retail lending portfolio continue to increase the proportion up to 89%. And since the layer of retail lending is higher than the corporate lending, so our blended layer for the whole portfolio we continue to go up. So net of with the increase of the layer of the whole portfolio because of the credit mix, with the decrease from the layer for the customer was impacted by the COVID, I think the layer of the whole portfolio is not much impacted. So the other factor that impact to the layer is interest reversals of the restructure loan. When you do the restructure loan for a loan, you have to reverse the accrued interest from the last payment made by the customer. So if the restructure loan increase, your NII will temporarily be reduced. But when customer pay back and come back to the normal position, the interest will be accrued again and return to in return a significant amount of interest. So this change has ever been happened in last year, 2020, in VIB. So therefore, for blended layer, I believe that we will keep our blended layer stable and even uptrend. However, it is based on the assumption of COVID restructure loan in the next quarter are under control and reasonable level. We hope that Vietnam will overcome the difficult time in of the COVID very soon. So that's the forecast of blended layer. Now we talk about the blended cost of fund. That is a component of the NIM management. So in terms of the funding cost, we have two big opportunities. Firstly, as I mentioned before, our current CASA level, so a huge opportunity to improve. So VIB have been doing well in many areas, like leading in retail lending growth, leading in auto loan, leading bancassurance and credit cards. And digital. I strongly believe that we will do our best to bring the CASA to the new level, so that our cost fund will significantly reduce and enhance our NIM in next coming time. And secondly, we have the opportunity in the offshore funding as well. As I said to you, the offshore funding is very good source of funding for good banks like VIB. The cost of fund in this kind of funding is only the LIBOR plus in the US dollar currency. And VIB now has 500 million US dollar in short-term offshore funding, and another 255 million US dollar in the medium long-term syndicated loan. So the lender are the global financial institution like IFC, ADB, and Cathay United Bank. So I can say to you new information that VIB has just signed a new syndicated medium long-term facility with ADB last week in early July. The size of the facility is 260 million US dollar. And this facility will help VIB to stabilize and manage the funding cost to reduce further. So we believe that our NIM will be improved in the coming time. VIB is good bank and a good partner of the global financial institution. We will continue to develop further business and cooperation between the VIB and those global FI. And the scale of the offshore loan will grow in line with the growth of the VIB business. So I hope that my answer can adapt your concern related to the NIM of the VIB in next period. Thank you.
Thank you very much, Mr. Lin. I believe that Mr. Lin's answers are very clear about the expected NIM of VIB in the coming time. A question from investor about digital transformation of VIB. Will VIB transform existing platform, digitalize process and product, or will you build a separate digital platform? What are the products being offered by as fully digital products right now? Mr. Minh, I believe that this question is for you. Can you please share some strategic point of view on this?
Thank you for the question. As mentioned above, the bank will do both in the digital strategy. On one hand, for banking operations, platform that having highly dependency on legacy systems will do transformation by upgrading the technology, digitize process and products. On the other hand, we are building a separate digital platform that focusing on digital native products and process. So you can see that for banking digitalization, we have been replacing some key system, a loan origination system. The first go live will be this October. We are on the process of selecting core banking system. It should be cloud native system, flexible for banking product configuration and open for integration with highly scalability capability. And cloud technology allows VIB not take care in hardware infrastructure. And for digital banking, we have launched digital account. Next slide. For digital banking, we launched a digital account with 100% digital onboarding process, including significant feature for Millennium and Gen Z customers. We have also produced a lot of digital native products such as VIB Online Plus, iCard, online insurance, and online saving. So we are moving from monolithic architecture to microservices architecture. MyVIB 2.0 and Smart Sale 2.0 are built on microservice cloud-native technology. So MyVIB planning to launch at the end of this year and Smart Sales next year. We as well planning to upgrade our website, transforming to marketplace for different players in digital ecosystem. Thank you for your attention.
Thank you very much, Mr. Min, for your sharing. And the last question for today's webinar, we have a question about funding business, CASA in specific. What are the CASA ratio of retail and corporate segment currently? Which is expected to be the main driver for CASA improvement? Regarding to the retail CASA, which type of customer the VIB target? Ms. Hương, can you please address some key strategy of VIB CASA?
Okay, so right now our ratios for retail banking CASA is about 60%, and the rest 40% come from the wholesale banking. And similar to bancassurance or credit card, that we are able to apply new technology and digital solution into the business. We are executing the new project to digitalize our CASA and deposit products as well. So the main driver for CASA gonna be digitalization solutions, AI, machine learning, and robotic that helps us able to be very flexible and that we can tailor-made our offer to our clients. And also with the digitalization, we will target to different type of retail banking customer segmentation, and especially we will focus on the young people and families, and including those that are very active on wealth and investment activities. So with digital, all about digital, right? When it booms, it booms. So we forecast a booming in CASA and deposit in a very coming time when our project is completed and have the first results in the next quarters.
Thank you, Ms. Hương, Mr. Min and Mr. Lin for your detailed sharing. In summary, we believe that well preparation leads to success. At VIB, with excellent operating model and flexible business approach, we are ready for the next meeting. I'm afraid that that's all the time we have today for today's webinar. So thank you everyone for tuning in. And for the rest question, IR team will follow up with you by email. Thank you very much and stay safe. We hope you, your family, and your business are all well. We will see you in our next event. Thank you very much.